Turning our attention now to the ASX. Here's Matt Birney and Bulls and Bears with the latest public company views and interviews.
Welcome to Bulls and Bears, where we break down the latest ASX announcements from public companies that are doing interesting things. Today's Bulls and Bears report is brought to you by Bardoc Gold, ASX code BDC. I'm Matt Birney and I'm joined now on 6PR by the Chief Executive Officer of Bardoc Gold, Rob Ryan. Hi Rob.
Hello Matt.
Bardoc Gold's namesake project covers some 17 mineral deposits that mostly sit on a 35 kilometre long north-south trending mineralised zone that kicks off about 40 kilometres north of Kalgoorlie. Whilst many of the deposits are still open and yet to be fully explored, Bardoc has already amassed a sizable gold resource and a respectable reserve, and recently tabled a lovely set of numbers in its long-awaited definitive feasibility study. Okay, Rob, before we get down and dirty with the DFS numbers, tell me just how big is the resource and the reserve at your Bardoc Gold project, and what sort of grades have you got out there?
Yes, so we have a high-grade resource. It's about 1.8 grams per tonne for 3 million ounces. And our mining reserves are high-grade too, at 2 grams a tonne for over 1 million ounces of reserve, broken up between open pits, which contain 564,000 ounces, and undergrounds, which contain 442,000 ounces.
Okay, so of the 17 odd deposits, which one holds the most gold and what sort of grades does it have?
So Aphrodite is our biggest deposit. It's a 1.7 million ounce resource, and it's 2 grams per tonne, so it's a high-grade deposit.
Okay, well, let's get into the DFS numbers with some rapid-fire questions. I know you've done some modelling at 2,250 an ounce Aussie. How much free cash will the mine spit out a year at that price?
So the mine will spit out $113 million per year free cash flow, and when you consider our current market cap at 120, that's quite a significant project.
And for how many years have you modelled that number at? How many years can it spit out $113 million a year for?
We've got an 8-year production life of the project.
And how many ounces a year are you planning to produce on average over that 8 years? And what's the highest annual production number estimated over that 8-year period?
We're planning on producing about 136,000 ounces a year of annualised production. And in year 7, we peak at 181,000 ounces, and we see a great potential to be able to expand upon that even further.
Okay, what's it going to cost you to build the mine?
It'll be $177 million pre-production capital, which isn't too dissimilar to our previous estimations.
Okay, and what's the internal rate of return on that capital outlay?
Our IRR will be 41%.
And the net present value of the project?
The NPV at the project is just under $480 million.
And most importantly, what do you estimate it will cost you to produce an ounce of gold out of the Bardoc Gold project?
So the project has all-in sustaining costs of $1,188 an ounce. So considering even today's gold price at $2,200, it is significant margin to be made at Bardoc Gold.
Rob Ryan from Bardoc Gold, thanks very much for joining me on 6PR today. And remember, Bulls and Bears is only here to give you information, not advice, which you should of course seek independently. I'm Matt Birney. Thanks for listening to Bulls and Bears.
For more public company CEO interviews, go to the Money page at 6pr.com.au and click the Public Companies tab.